Financial Empires and Strategic Invisibility, a Case Study in Foundations, Banking Power, and Legacies. 1. Thesis and Scope. You analyze how a discreet Swedish business dynasty converted low public visibility into durable control over banks and industrial champions, illustrating how empires persist through ledgers, foundations, and governance rather than territory. Footnote. You frame the central claim that financial architectures outlast military or territorial dominance by design. 2. Core concepts. You define strategic invisibility as minimizing personal salience while maximizing institutional control, foundations as perpetual vehicles that hold voting blocks and fund research, and banking power as balance sheet capacity plus network position across industry and state. Footnote. You set the vocabulary that links reputation, ownership, and intermediation into one analytic system. 3. Banking origin and modernization. You examine the move from a centralized credit system to competitive private banking in 19th century Sweden, where pooled household savings financed industrialization and created an exportable financial model. Footnote. You locate the initial leverage point in retail deposit intermediation that scaled national growth. 4. Legal engineering, holding companies and foundations. You assess how ownership limits on bank industrial stakes produce listed investment vehicles and philanthropic foundations that legally separated control from personal wealth, stabilized voting coalitions, and eased succession. Footnote. You show that structure, not secrecy alone, preserved control across generations. 5. Governance philosophy. You document a culture of reinvestment, low conspicuous consumption, and tight board oversight across heavy industry, technology, and export finance, prioritizing compound control over visible affluence. Footnote. You connect behavioral norms to credibility with governments, creditors, and managers. 6. War era neutrality, commerce, and controversy. You analyze Sweden's formal neutrality and the family's cross-border intermediation during World War II, noting allegations of cooperation with occupied territory asset flows alongside roles in Allied-facing negotiations. Footnote. You present neutrality as a risk-managed posture that generated post-war reputational exposure. 7. Resistance channels and humanitarian action. You note backchannel contacts with German resistance elements and highlight Raoul Wallenberg's documented protective actions in Budapest that saved thousands through documents, safe houses, and direct intervention. Footnote. You separate clandestine diplomacy from publicly recorded humanitarian rescue led by a recognized figure. 8. Post-war scrutiny and blacklisting. You record that U.S. authorities publicly restricted certain entities and counterparties linked to wartime dealings, triggering reputational damage at home and forcing tighter compliance and disclosure thereafter. Footnote. You treat blacklisting as a legal political shock that required governance remediation. 9. The unresolved disappearance of Raoul Wallenberg. You recount detention by Soviet authorities in the absence of definitive resolution, and you evaluate the limits of private influence against state security priorities in authoritarian systems. Footnote. You mark a humanitarian and diplomatic failure whose uncertainty endures in the historical record. 10. Industrial consolidation and post-war expansion. You trace restructurings that integrated engineering groups, aerospace, and process industries, using the bank industry nexus to stabilize national champions and to internationalize production and listings. Footnote. You show how boardroom coordination substituted for imperial territory in building scale. 11. Foundations as invisibility engines. You explain how large grant-making foundations hold core stakes, avoid fragmentation from inheritance, deflect personal wealth rankings, and mandate national research funding while retaining voting alignment across portfolio firms. Footnote. You identify the foundation stack as the principal technology of quiet control. 12. Contemporary reach. You assess influence across pharmaceuticals, telecom, engineering, defense, and payments, with governance concentrated through investment companies and foundation share blocks that shape capital allocation and board composition. Footnote. You map sectoral breadth as the mechanism by which a private dynasty affects public markets. 13. Ethics, risk, and resilience. You weigh the benefits of long-horizon stewardship against democratic transparency concerns, wartime moral hazard, concentration risk, and dependence on elite networks, noting how philanthropy can buffer scrutiny without eliminating it. Footnote. You present durability as contingent on legitimacy, disclosure quality, and compliant conduct. 14. Comparative implication. You generalize that modern empires persist as banks, foundations, and contractual ecosystems. The instruments are interest rates, board votes, collateral rights, and standards, not forts or flags. Footnote. You translate a family narrative into a model of power that travels across countries and eras,